Hello dear students, welcome to Devika's Commerce and Management Academy. Indian Accounting Standard 34 we are going to discuss. It is explaining very clearly about interim financial reporting. What is interim financial reporting? I'll make it to understand very clear and easy also. Did you hear interim dividend? Interim dividend? Dividend generally annually they'll pay. Interim dividend means mid of the year, somewhere like after 6 months or after 4 months, after 3 months, quarterly, half yearly. Paying a dividend, that is interim dividend. In the same fashion, interim financial reports. Interim financial report means generally financial reports will be submitted yearly once. Financial year ending 31st of March will be submitting the report, right? So preparing the financial statements like profit and loss account, balance sheet, and then cash flow statement. These are financial statements will be submitted end of the year. Interim financial report means mid of the year, like after 6 months, after 3 months, or quarterly, we can submit the interim financial report. It is going to give lots of advantages. Why to wait till 1 year? In the middle of the year, whenever you are submitting, you are preparing financial reports, you will come to know exactly the true position of the organization also. Financial position, you will come to know any kind of changes you want to do, what's happening, and how the things are going on, everything you'll come to know. That is the reason interim financial report is preparing by many organizations. Quarterly, most of the organizations are preparing. Quarterly means for every 3 months, preparing interim financial report. Related to the interim financial report, we have Indian Accounting Standard 34, interim financial reporting. In one sentence, we'll understand what is this. Interim financial report is a condensed or complete set of financial statement. Condensed, short form, or complete, though it is condensed but complete. Condensed or complete set of financial statements prepared for less than 1 year. Interim financial report is prepared less than 1 year. Underline this point. This is prepared less than 1 year. Less than 1 year means it can be that is 3 months, quarterly, or half yearly. As I told you, most of the organizations are preparing quarterly. Means for every 3 months preparing the interim financial report. So what it should be? What is to be mentioned in the interim financial report, that is discussing in the Accounting Standards 34. Okay. Now let's talk about what it includes. 34 says it includes three information. Three information is must. What is that information? First one, information of transaction from GAAP to Indian Accounting Standard. Information related to GAAP, General Accepted Accounting Principles. General Accepted Accounting Principles. This is GAAP. So the transactions as mentioned in the GAAP to Indian Accounting Standard, both should match. So that is transaction from GAAP to Indian Accounting Standard. Second one is information of change in income stated in GAAP to income stated in Indian Accounting Standard. We are talking about here income. Here in the first point, transaction, general transaction. Second point, information of change in income. If any change in income stated in GAAP to income stated in Indian Accounting Standard, both together we are matching. And also information consisting of errors encountered in GAAP. Generally accepted accounting rules, according to that whatever we have prepared there, if we encounter, if we come to know it, if we confronted any kind of mistakes or error, that has to be informed. It consisting of errors encountered in GAAP. These are the main three things to be remembered when you are preparing according to the Accounting Standard 34 interim financial reporting. Okay. Now objectives. What are the objectives of 34 Indian Accounting Standard 34? Mainly to enhance the ability of the users of financial statements to understand the firm's scope and generating cash. Whoever is preparing financial statements, their ability we wanted to increase it, because in as per this accounting standards, so it has mentioned few things, the same things we have to follow. So if you follow, what happens automatically, the ability of the users of the financial statements, it will be much beneficial. And also to provide timely and accurately information to the users of financial statements, whatever information is there, timely we wanted to provide, and also accurate information to be provided to the users of the financial statements. And also, why this will be considered as objective means, interim financial reports, we are not waiting for 1 year. After 3 months only, every 3 months we are getting reports, so that what happens, timely, accurately, somewhat information will be given to the organization or management members. That will be beneficial. This is the main object. And also to set a standard for identification, wanted to set a standard for identification and measurement of interim financial report. A report should be like this. Every 3 months we are preparing this, so we are going to set up a standard. This is the standard we wanted to follow. Next 3 months also same thing. If any changes, if any kind of small verification or small changes, then automatically we can rectify it or we can mention it. So that is why, to set up a standard, every 3 months we are preparing, we can set up a standard. And also to provide with the information related to the working of an enterprise, to provide with information, to provide the information related to the working of an organization. Information, any organization information you can provide it for every 3 months, for every 4 months, like you are preparing. Then automatically what happens? Time to time you will be getting the information. You need not to wait for the full year. And also to help the firm in knowing the profit or loss incurred during the financial year. Well in advance they'll come to know if you go for interim report. Well in advance, whether the company is going towards the profit, towards the loss, that will come to know. That is what we are saying, to help the firm in knowing the profit or loss incurred during the financial year. Not after the financial year, during the financial year itself only. Underline this point. During the financial year itself only you will come to know that whether the organization is going to get the profit or loss, how the things are going on. So these are the main objectives of Indian Accounting Standard 34, interim financial reporting. Now components. What should be there in the interim financial reporting? Mainly 5 transactions, 5 items are included in the interim financial reporting. One is condensed balance sheet, normal balance sheet, and also condensed statement of profit and loss, condensed statement of cash flow, condensed balance sheet, condensed statement of profit and loss, which is nothing but profit and loss, and balance sheet also, you know. Here in the third point we are saying cash flow, condensed statement of cash flow, and condensed statement of change in equity. Condensed statement of change in equity. Equity is changing sometimes, increasing or decreasing. What's the difference? Why it is changing? That report also we are including, and also explanation notes to report. Explanation notes to report. Anything wherever explanation is required, that report also to be attached. These are the 5 components of interim financial report. In general financial accounting, financial reports means, what do we prepare? Profit and loss, balance sheet, and cash flow statement. These are compulsory. Along with these 3, 2 things are added: changes in equity and also explanatory notary to the report. These 2 things are added. Apart from this, the 3 are same. Easy to remember. Okay, that's about the components of interim financial reporting. Next, we will focus on the format of interim financial report. How will be the format? Few points you have to focus. First thing is that complete form of report. Financial report, interim report you are preparing. Interim report, it does not mean that half information is given so far. Whatever date you are preparing, so that information, complete form of report is to be prepared. Now remember here, it will be same like report prepared as per the schedule of 3 Companies Act 2013. The preparation, methodology and everything will be same like Schedule of 3 of Companies Act 2013. Companies Act 2013, as per that company accounts we learned. There is a schedule. The same thing you have to follow. It's not that interim report we are preparing as per you are we should prepare. No. Same thing you have to follow. Complete format. Okay. Next, condensed format report. Condensed format report means here few things you have to understand. First thing is that heading and subtotals should be very clear. Heading and subtotals. Explanatory notes in detail. Wherever requirement is there, explanatory note. That is the reason when we prepare accounts, always you'll be writing a note or explanatory notes, isn't it? So that is here mandatory. As per the Indian Accounting Standard 34, it is mandatory. That's the reason you used to attach the required notes. Even company accounts, when you used to prepare every notes for every transaction, notes we used to attach. That explanatory notes also required in condensed report. And also, if additional items are recognized, if any additional items are recognized, notes of additional item. If any additional items are there, for that notes also to be attached. And last one, earnings per share, EPS. EPS. In condensed format report, 4 things you must mention it. What are 4? Headings and subtotals, explanatory notes in detail. In any additional information, if you find the notes of related to the additional information, and EPS, earnings per share. 4 points. Able to remember? First one, complete format of report. Second one, condensed format of report. Here 4 points. Now coming to third one, explanatory notes. Explanatory note means wherever requirement is there you have to give the explanatory notes. That is, the selected explanatory notes is to be included while preparing the interim financial reporting. Notes is to be included in, you can say it as in interim financial reporting, wherever requirement is there. So specially mentioned about the explanatory report. And also last point, preparation of interim financial report. Lastly, when you are preparing interim financial report, 2 points is to be remembered. One is the report must be consolidated form. Consolidated form, and not essential to consider the standard of parenting company. Parenting company is preparing different method. Need not to follow the same method of the parent company. You can prepare because it is interim, not final. It's not final. Interim financial reporting is only for the information of the organizations. Wherever requirement is there, anyway we are preparing consolidate form, but not essential, not must to consider the standard of parenting company need not to be followed. So that is you have to remember while preparing a interim financial reporting. So these are the 4 points to be remembered while preparing the format of interim financial reporting. Now here, disclosures of notes as per the Indian Accounting Standard 34. What is to be included? Disclosures. What is to be included means 6 points you have to remember when you prepare the interim financial reporting. First one is accounting policies, don't ignore. You have to follow the accounting policies, GAAP, General Accepted Accounting Principles, that you have to follow. And seasonal and cyclical effect. If any kind of changes are there, seasonal means market or economic changes, any effect is there, that effect also you have to mention it. Due to so and so the things got changed, you have to mention it. And also change in estimates and payoff dividends. Dividend spelling is gone wrong. DIVI. Change in estimates and payoff dividends. Dividends already decided generally. How much would be the dividend rate? Sometimes there may be changes due to the loss or due to the profit. If any change is there, change in estimated and payoff dividends, that you have to mention it in the interim financial report. And also information related to segmentation. Any kind of segmentations are there, that segmentation information also to be mentioned. And elements of balance sheet, this is elements of balance sheet, profit and loss account, and cash flow statement. These three separately you have to mention it. And lastly, composition effect, that is change in business. Composition effect means any kind of changes in the business. How will be the changes? The changes can be like merging the organization, acquisition of the organization, reconstruction, internal or external reconstruction it can be, and also liquidation, etc. This kind of any example I am giving you. This kind of any changes are there that has to be mentioned in the interim financial reporting. So these are the main 6 points you have to remember. And how to remember the entire concept, that I'll give you a gist of 2 minutes after taking the screenshot. Take a screenshot, then after that you'll get a gist of how to remember the concept. See, first understand interim financial reporting means what does it mean. In one sentence we learn. Then after that, what it includes. It includes 3 points. Then after that, objectives. What are the objectives? Objectives you have 5. In general, if you think also you can remember, need not to by heart, need not to write the same sentence. Okay, objectives. Then components are very easy. 3 things are, and only the thing is we are adding equity and also explanatory notes. These 3 things we know. Components. Then after that, preparation of or format of the interim financial reporting. Here complete form of reporting, condensed form of reporting. Here 4 points are there: headings, subheadings, explanatory notes, and also additionally anything is recognized, that notes also you have to mention, and EPS. Okay, so this is condensed format of report. The third one, explanatory notes, is very easy. Just one sentence you can write. And also preparation of interim financial reporting. 2 points to be remembered. And lastly, disclosure notes as per the Indian accounting standard. 6 points. One is accounting policies. You know it almost. A seasonal and cyclical effect, change in estimates and payoff dividends, and information related to the segmentation, elements of profit and loss account, balance sheet and cash flow, and composition effect of change in business, any kind of changes. This is the main information to be included in the Indian Accounting Standard 34, Interim Financial Reporting. That's all. Very easy topic. You have basic information, basic understanding you are having. What is interim dividend? Now, according to that, interim financial report. The same thing you have elaborated according to the Indian Accounting Standard 34. Hope it is clear. Not so tough, right? How many of you agree? In the coming class, we'll discuss more Indian accounting standards in an easy way. I'll make you to understand. Don't forget to share this video and stay connected. Check out the playlist. Good luck.